What's up, everyone? It's your boy Looney. Today, I'm going to ask myself and go over whether I got greedy, especially with the recent volatility, some of the tariffs coming back and doubling down on the steel imports, and overall the market dipping. I have been just reviewing my recent trades, especially the ones where I sold puts with, we're going to go over now with some limited cash on hand. And just being honest now, some of them I might have gotten into a little too early. But before we get into it, quick shout out to the Discord. It is free to join. And then I also have a premium $8 a month, which provides you with coaching, trade alerts, and giveaways. There's a course. You can check it out. All links are in the description. So let's break this down. So what I was doing is I sold a bunch of cash secured puts on Mara and Riot because I wanted the shares at a discount. And I saw these red days as opportunities. I saw the fear and I thought, all right, this is probably the moment. So let's just go over what I actually did. Let's click on Mara itself because I have a lot of different options going on. And right now, the stock is down on the day, or after hours on the week, it is down 6%. So overall, it's not a bad time to sell puts, especially if we go to the 1 month chart. It's on the lower end. But I did this before the recent drops. And we can just look here. I have a $14 put, $13.50 put, another 14, and a 13. So the only one that is of concern are these two $14 right now, because Mara is currently at 14.08 or 08. And there's a chance of assignment, which actually isn't bad. Once again, if I do get assigned at 14, I will lower my cost average and I could sell covered calls to earn some income while owning the shares. But could I have waited a little bit and done them now? Because when I opened up this $14 put, this one especially, I did it on the 19th. And if we go to the 19th for Mara, it was actually trading pretty high. I mean, it was up to $16. So I could have just waited. And if we look at this other 14, when did I do this one? On the 12th. So if we go to the 12th and we go to here, again, probably not the best time to sell a put, but I did want to collect some premium and I went pretty conservative with the trade. And then more recently, I did the 13.5 on the 15th. So if we go to the 15th, was here. Not a terrible time to do it. And then I believe, let me go back to these trades. The 13.5 I did there. And then the $13 one I did on the 23rd. And we go to the 23rd and go to the 1 month chart. This one was a little bit better when it started dropping under the $15. And then this 12.5, I did it very recently on the 30th. So did I go a little too early on this trade? I still don't know. On market open on Monday, this stock still might drop because it revolves around crypto and Bitcoin because it's a Bitcoin mining company. And I'm sure we're going to see a little bit of a drop. And it could go all the way down to $11 like it has before. It went down to 10.52. But even still, I'm okay with that because I'll get my average cost down and I can sell covered calls. So let's move over to Riot because that's the other one I've been selling puts. So this one I did here. And similar situation. It's at $8. And the ones that are of concern are the $7.5 put. I have one there and I have two there. So I have about 3 contracts that are, or 4, there's another one. So 4 contracts that are getting close to assignment, which is not bad. I know I sound like a broken record saying this, but it is lower than my average cost right now. And you might be thinking to yourself, why not just wait for it to drop at $7.50 and buy shares? That's because you really don't know. This trade is really saying I'm okay with owning the shares at $7.50. And if it doesn't, I'm okay with that too because I get paid for locking up my cash for some time and getting some premium for it. So there's a chance I will get 400 more shares and get 1,200 shares. So this one on the 6th, I might get assigned at 7.5. But truly, my break even is 7.28. So if the stock stays above 7.28, in actuality, I didn't really lose money on the trade. And I will also sell covered calls on this position as well. But if we add up all these together, I have, let's look at all the cash I have locked up. So $3,700 in cash collateral for Riot. And then if we switch over to Mara, I have $6,700 in cash or collateral, which is about $10,000 in cash that is locked up right now, just waiting on the stock. So the stock, whether it drops or stays the same, I will get that cash back depending on what happens. And it's just a lot of cash. It's $10,000. That's about 10% of my portfolio, maybe even more than that. I don't know, about 20% maybe of just cash that I threw into these plays, which I don't know if I'll get assigned in all these. And if I do, not the worst thing. And I still do have a little bit of cash. I have 800, a very small position. And what I'm doing with this one is I'll probably buy a call option just because if we do see some volatility and further downturn, and I'm just going to wait. And then once I see some support, I will likely buy a call. But as of now, I'm just kind of sitting and just waiting for any kind of moves. And just overall, I might have jumped the gun slightly. Volatility wasn't exactly done. I didn't really wait for confirmation. And I guess I got greedy with just collecting premium. And also the macro just wasn't set up clean, especially with tariffs being back and still uncertainty with that. China's tension obviously picking up once again. We saw aluminum going back up to 50% on tax. So on I think June 6th or somewhere around there in early June, we're going to see a 50% tariff on steel or aluminum. And I should have just kept distance, left on the sideline, and just waited for better entries. But in all reality, you can't really time these things. You don't know that Trump's going to tweet this or another event's going to happen. You could simply just stay invested and just work with what you got. So what I'll do is I'll manage my trades accordingly and maybe sell more puts to even lower my cost basis. But overall, not a bad trade overall because my average cost is 9.26. So just getting the average cost down is the real issue, the one that I'm really prioritizing getting. And then with the last issue I'm running into is the low cash, as I have low flexibility. So if these stocks do tank harder, I don't have much dry powder to average down or just roll down aggressively. I don't know if I'll roll down my puts, but if needed, rolling down. But that doesn't mean I blew up and just set my account on fire. It just means I didn't leave myself enough room to make major maneuvers. And that's what greed looks like sometimes. It's quiet, it's subtle. And what I've learned is not every red day is a buy day. So we saw a lot of red, a lot of volatility recently, but that doesn't mean you should jump the gun and just deposit all your cash. And just because something is down, it's not time to deploy. Let setups form and just be patient. And the second one is pacing is key. I could sell more puts later at better strike prices if this turns into a deeper correction. And the last thing is cash is very underrated. That buffer is not weakness. Having cash is ammo. And I'll be making that a bigger part of my strategy moving forward. So did I get greedy? Yeah, maybe a little, but this is how we learn. Not just from the wins, but from the oversteps. Drop a comment. What's the greediest trade you've made recently? Like, subscribe, and join the Discord if you want real-time breakdowns. Peace.